Today, I'm going to be answering the first question that often first-time buyers ask themselves, which is, how do I apply for a mortgage? So, to save you time and give you information, I'm going to be explaining the three main ways and the three main options that you have as a first-time buyer when applying for a mortgage. Now, before we jump into things today, if you're wondering who I am and why you should listen to me, whether you do or you don't is completely your decision, but my name's Josh. I'm the managing director of My Mortgage Finder. We are a bad credit mortgage brokerage based in Leeds. We employ over 30 people and we help our customers arrange over £100 million worth of bad credit mortgages every single year. Okay, so the first option that I'm going to be talking about, which is a really popular option for a lot of people and very, very common, is approaching the bank that you bank with directly. What do I mean by this? So if you were to bank with NatWest, I'm talking about you might approach NatWest directly and say, please can I have a mortgage? Or if you were to bank with Halifax, then you would approach Halifax directly and say, please could I have a mortgage? Now, I guess a lot of people choose to do this just from simplicity because they bank with them directly. They think there's an existing relationship there already, and it just makes sense to reach out and do that. So what I'm going to go into now is just laying out some of the pros of actually doing this. So the first pro, and probably the most obvious pro, is that you're not going to have to pay a broker fee. And by a broker fee, I mean a mortgage broker fee. And a mortgage broker, just in case you don't know, is somebody who specialises in helping someone arrange a mortgage. It's basically a mortgage advisor who would look at the potential market for people, okay? So you're going to save on that cost because you're not going to be using the service. How much is that cost? How much is that saving? Ultimately, it just depends on the type of mortgage that you need, and it depends on how specialist your case is. It really can vary, but that is a cost that you're going to save. The second pro, now this in my opinion isn't a huge pro, but I am going to mention it anyway, and that is that there is an existing relationship already there with your bank. Now, in all honesty, this often doesn't carry a lot of weight, and I know this because we have so many of our customers come to us and they say, oh, I can't believe it, I've been with this bank for 20 years and I've asked for a mortgage and they didn't give me it, and they're really surprised. And of course I'm not by this stage because we see it so much, but ultimately there is still a relationship there. They will have a record of you on file, and I guess there are ultimately certain occasions where that can have a slight benefit. The third pro of doing this is it's highly likely that the lender that you bank with, let me list out some common examples: Halifax, Santander, NatWest, Barclays. These are all high street lenders. So what that's going to mean is that you're likely going to be offered what's known as a high street rate. And a high street rate is something that I would call very competitive, you know, really in the top bracket of rates in the marketplace. So even though you naturally wouldn't know it's the best rate on the market, and we'll come to that in the cons list in a second, you know, you would have a peace of mind that it's probably not going to be far away from very, very competitive. So let's go ahead and talk about the potential cons here then. So the biggest con, in my opinion, or one of the biggest cons, is that you're going to be limited to that lender's mortgage products. Now, what do I mean by this? Just a moment ago, in the pros list, we talked about how the rates would likely be competitive. And yes, that's correct. But how could you possibly know that you're getting the best available interest rate and overall mortgage product if you've only approached one lender directly? You just can't. I mean, you might just be really lucky and on the off chance have got that, but ultimately you would never know. So that's why it's in my cons list, because even though it's likely to be competitive, you just don't know that you're getting the best. So the next con that I'm going to talk about is that you're limiting yourself to that specific lender's lending policy. And what I mean by this is every single mortgage lender have a specific lending policy, and you will either fit that lending policy or you won't fit that lending policy. So they might just turn down your application, whereas there might be lots of other banks out there who would have approved the mortgage, but you don't know that because you've limited yourself by approaching one bank alone. Let me give you another example. You might have approached your bank, let's use Halifax in this instance, and you may have wanted originally £180,000. you might apply for the mortgage, they might assess the application, and they might say, we've got affordability concerns, and we're only prepared to lend you 150,000. You might think that's the best offer on the table, so you might take it. However, what you don't know is if you'd have approached Santander as well, they might have given you the full £180,000 that you originally wanted, and they might have done it at a better interest rate. So my point is, you're limiting yourself to that one lender's lending policy, and you don't know what else is out there. And the third con I'm going to be talking you through when you approach your bank directly is you're normally going to be looking at high street lending policy. Let me just be very clear what I mean by this. High street lending policy is great if you don't have a quirk on your mortgage application. So let's say, for example, you have some bad credit, like a lot of our customers do, and you approach your bank directly, it's pretty damn unlikely you're going to be accepted for that mortgage application. So if you do have some bad credit, or there's something else a little bit quirky going on with your mortgage application, potentially you're on a particular type of visa, again, just remember, if you're approaching your bank directly, it's going to be a high street lender, it's going to have a high street lending policy, and these types of mortgage lenders are less inclined to lend on quirky mortgage applications. Okay, so just to recap, the first thing that we discussed and the first option that we mentioned, that if you're a first-time buyer and you're thinking, how do I apply for a mortgage, you've got, is going directly to your bank. And the pros that we discussed when doing this is that you will potentially save on a mortgage broker fee, you will have a pre-existing relationship already there with your bank, and it's likely that if you are approved, that bank will offer you a high street rate. And the cons that we listed when it comes to doing this would be that you are going to be limited to that lender's products and the mortgage products that they can offer you. You're going to be limited to that lender's lending policy, and you're normally going to be assessed on a high street lending policy as well, which can obviously have its downfalls. So the second option that we're going to be talking about then is researching the market yourself. And I want to be really clear what I mean by this. So another option that you have if you're a first-time buyer and you want to apply for a mortgage is you could have a look at all of the different lenders that you could access that you're aware of. So you might look at Halifax, you might look at Santander, you might go online and just do some research about which lenders might approve your mortgage and what mortgage products that you might qualify for. That is what I'm talking about when we talk about doing the mortgage research yourself. So, like before, I'm just going to simply list the pros and the cons to doing this. Okay, so the first pro that I'm going to talk about, like I mentioned on the previous option, is that you're not going to have to pay a mortgage broker fee, which, as we know by this point, is a fee that you would pay for somebody helping you to arrange the mortgage. So the second pro that I'm going to talk about is because you're researching different mortgage lenders in the market, and the key word here is options, then you're going to see what different interest rates and different products these lenders are offering you. Once you've conducted all of your research, you can see which lender appears to be the best fit, and ultimately you can pick the mortgage rate or mortgage product you like and think is going to be the most appropriate one for you. And the third pro that we're going to talk about when we do this is you're going to see lots of different lenders' lending policies. So like we discussed before, if you just approach your bank directly, you're going to be looking at one lender's lending policy. Whereas this way, you're going to see multiple lenders' lending policy. So if you don't fit with one, that's okay. You might fit with the other. If one lender says that you can only borrow this amount of money and you wanted more, hopefully another lender would be able to give you the amount that you want. So again, what this is ultimately doing is it's providing you mortgage options. So the first and probably the most obvious con here, it will be a bigger con for some than others, but all of the things that we're talking about here, research, looking at different lending policy, looking at different interest rates, which mortgage lenders will do this, which ones won't, reaching out to the lenders directly and discussing it with them, all of these things take time, okay? So this is going to be a time-consuming job that we're talking about. Just to add one more thing into this as well, depending on how confident you are doing this type of thing, will probably add time as well, because if you're not very confident and you're learning as you go, that's just going to add even more time to the task. So a big con here of doing this is ultimately it is going to take your time by doing it. So the second con of doing this is ultimately, if you do carry out the research and try and do this yourself, and there's nothing to say you shouldn't, by the way, but if you get it wrong, it could cost you a lot of money. And you've got to think about it this way. You're trying to replace a job that is normally done by a professional person who has been through a process where they have to be signed off as fit and proper and competent, and they have to pass 3 separate qualifications to give this advice. You're trying to replace that person's job by doing that, which ultimately, if you don't get it right, you could pick a mortgage product for you that is just not suitable, or it might be too expensive, or you might go with a lender and you might do your calculations and you could have just got it much cheaper with another lender. So just always worth bearing in mind, if you are going to do this yourself, which as I said is fine to do so, take the accountability that if it goes wrong, it ultimately could be an expensive mistake. So that's really something just to consider. Okay, so the third con that we're going to be talking about is it can be confusing. So when you're conducting your research and you're looking at the different lenders, and then if you do identify a lender, you're trying to pick the mortgage product that you want, then all of these things can be confusing if you don't know what you're looking at. And ultimately, if you are doing it for the first time, then that could be a challenge and it ultimately could cause a problem. We have seen this lots of times before. People start the research, they're struggling, they're coming up against dead ends, and then they just decide not to do it because it all becomes a little bit difficult. So ultimately, the fact that it's confusing and challenging, that has to be a con. Okay, so the next and definitely one of the biggest cons of doing this is you will identify certain lenders in your search, and you will then find that they only work with mortgage brokers. And that just means you can't actually put the application in directly yourself. So let me just kind of walk you through how this might work. You might have identified 10 or 15 lenders who you think might be able to do the application. You think, great, this is the one that I want to go with. You call up that lender, please could I take the mortgage out? And they say, you need to go through a broker. And ultimately, all of the work that you've just done, that broker would have had to do it anyway, and you've just done it yourself. So that definitely is a con of doing it this way. Okay, so the last con that I'm going to talk about is it's very, very unlikely. I'll be absolutely shocked if anybody carrying out this research themselves as a first-time buyer had the right software to conduct the research. So to give you an idea, a mortgage broker, they have all this different software to identify the lenders, pick the best rates, pick the best mortgage products, and then see which lenders are a good fit for them. Ultimately, you wouldn't have that. So that is going to be a huge challenge in itself. If you don't have the software, even knowing where to start with this type of thing is going to be incredibly difficult. Okay, so very quickly, let's just recap on the second option that we discussed on how you can apply for a mortgage as a first-time buyer. The pros that we discussed were you're going to save potentially money on a broker fee. You're going to be able to see various different mortgage rates that the lenders that you look at will offer you, and you are also going to see various different lenders' lending policies as well. And the cons that we covered were it can take a lot of time to do this. If you get it wrong, it can cost you a lot of money. It can be confusing. A lot of mortgage lenders out there will only work with mortgage brokers, and it's highly unlikely that you won't have the software that you need to complete the research. So the third option that we've got when it comes to applying for a mortgage as a first-time buyer, it's probably the most popular one, is using a mortgage broker. Now, if you don't know what a mortgage broker is, it's somebody that you would appoint to conduct thorough research of the marketplace and pick the most appropriate mortgage option for you. So naturally, I'm going to start by talking you through the pros of doing this. So the first pro that I'm going to cover is a mortgage broker will have access to a wide variety of mortgage lenders and mortgage products. So just to give you an idea, we have access to over 110 lenders. The reason we say it's over 110 lenders is there's new mortgage lenders coming to the market every single day. So you can see how that's going to give a lot of different options and put a lot of different options on the table. Their job would be to look at all of those options and ultimately pick which the best one for you is. So this naturally takes me on to the next pro, that because a mortgage broker would be looking at a wide variety of mortgage lenders, it's going to give you access to different mortgage rates, so lots of different mortgage interest rates, and lots of different lending policies. So remember, like we discussed in the previous points, if you have access to a lot of different rates, hopefully we can pick the one to maybe give you the cheapest mortgage payment if that's what you're looking to do. And when it comes to the lots of different lending policies, because we're looking at all these different lending options as well, if you have some unusual needs or you need to be able to borrow a certain amount, you're struggling to get it with one lender, another mortgage lender might be able to get you more. Ultimately, options is a great thing, and a good mortgage broker will be able to pick you exactly what you need and really get you the best of the bunch. Okay, so this brings me on to my next pro, is that you're going to have an expert who can handle all of this for you. So just like before, on one of the previous options we discussed, one of the cons was it can be confusing. Remember, a mortgage broker's job is to do this every single day. So they're an expert, they've done it before, they can make sure everything's done right. So ultimately, you know, if you pick the right one, you're going to be in safe hands. So the next pro that I'm going to be talking about is a good mortgage broker will know how mortgage lenders like things to be presented. So mortgage lenders will look for certain things in applications. They will look for certain documentation, certain explanations, certain commentary around certain points, and a good mortgage broker will generally know what that needs to look like. They can then act as a screen between you and the mortgage lender, communicate with you properly, make sure they have a good understanding of what's happened and what the explanation is, and then relay that onto the mortgage lender in the best way to give yourself the best chance of mortgage approval. And then the last pro that we're going to talk about is using a mortgage broker. They do have access to special rates that are not available to the public, and they will also have access to lenders that are also not available to the public as well. So this one should be quite easy to understand. If you can't access a lender, a mortgage broker might be able to access that lender. If that lender is the best lender for you, then there's a clear benefit in this example of potentially using that mortgage broker. Okay, so let's go ahead and talk about the cons. So the first and the biggest con, in my opinion, is you are ultimately putting your trust in someone else's hands. And I guess, who do you trust the most in the world? The answer is probably yourself. So to put that trust into somebody else's hand, that can be a big deal, particularly when it comes to something as emotional and important as buying a home. Okay, so how can you offset this? I guess naturally you can do your research, make sure you're picking the right company, have a look at reviews, make sure that the company are authorized and regulated. All of these things can help you pick the right person, but it doesn't detract away from a potential con for some people, is they are giving up a little bit of control by doing it this way and ultimately putting the trust in someone else's hands. And probably the biggest con to a lot of people is most mortgage brokers, particularly ones in a specialist space, will require payment of a broker fee. And that is a fee that you would pay to them for the service. Obviously, if you did it yourself or you approach the bank directly, then that wouldn't need to be paid because the service wouldn't be required. So quite clearly, that can be a con. Okay, so let's quickly recap on the third option that we discussed, which was using a mortgage broker. The pros that we listed were, you're going to be able to compare multiple lenders, which is going to then mean that you can compare different lending rates and different lending policies. You'll have an expert handle everything for you. The expert will make sure that everything's communicated to the mortgage lender in an appropriate way, and you will also have access to exclusive rates and exclusive lenders. The cons were, you will have to put your trust to an extent in somebody else's hands, and you will likely have to pay a broker fee. So there you have it. They're your three main options if you are looking to apply for a mortgage as a first-time buyer. Like I've said, there's really no right or wrong way of doing this. All of them have the pros, all of them have the cons. It's ultimately whatever's right for you. Now, if you do have any more questions on anything that we've covered in today's video, feel free to put those in the comments below. Alternatively, you can send us an email. The email is also in the description. So if you've liked today's video, please hit the like button and smash the subscribe button. Please make sure that you turn on the notifications for more tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.